right, everybody, let's go ahead and get started. It's going to start off with a little bit of an update from last week and just going over some of the same information with a little bit added. So just analyzing this correction that we're in, this bear market. The way that corrections work, they all unfold in set patterns, and it's the same patterns over and over again. With variations, obviously, there's parameters they follow, but it doesn't matter if it's on a 5-minute chart or a 1-week chart. We're dealing with the same kind of corrective pattern. Like, for example, back in 2000, the 2000 top to the 2009 bottom, where the market really went sideways. If you zoom out, that was a pretty clear flat, like a corrective flat. You have an A wave, a B wave that went up to make a double top, and then a C wave that went down to new lows. And that was happening on a 10-year time scale. So that's a pretty large example. But I just wanted to say that because this, to me, is a pretty clear corrective pattern playing out. It's, as we said before, we have 3 waves down, 1, 2, 3. There's your A wave. 3 waves up, there's your B wave. And then a third leg down is your C wave that unfolds in 5 waves, 1, 2, 3, 4, 5. And so what I'm looking for, and I've said it before, I'll say it again, is I'm looking for a few things to confirm that, like, the corrective structure has completed. 1, do we have a full corrective pattern in place? And the answer is yes. I just went over it right there. The second one is there symmetry? Because markets are obsessed with symmetry, and corrections are especially symmetrical. And so this right here, the 138.2%, this is a Fibonacci number, and usually these corrections will unfold respecting these Fibonacci relationships. What I'm measuring is the length of this final leg in relation to the first leg down, the C versus the A. And as you can see, the C wave tagged the 138.2% extension perfectly. And then it started moving up. So we have those 2 parameters are in place to say that the correction, that we can start looking for an end to the correction. The other things I'm looking for is I want to see divergences. Usually the most dramatic moment of a correction is going to be the 3rd wave within your C wave. So I'm looking for peak technicals and peak volume. And we got that with technicals. As you can see in this 5th wave where the market made a new low, the momentum did not. So the strongest move within this bear market was the 3rd wave of the C wave. However, we tend to see the same divergence with volume on that 5th wave, and we didn't get that this time. We had actually 3 gaps down. This is, in my opinion, the most dramatic move of the market. You just don't see this many gaps down on heavy volume. Usually that will signal that the correction is not typically over, but that seems to be what we got. So we had almost everything that I'm looking for to signal that a correction is that the corrective pattern is correct, and we can start looking up. The final thing that I'm looking for is this breakout of this downtrend channel. As you can see, when you see this move, after all those factors are in place, is telling you that the immediate downside, like looking for a new low, is the probabilities are less likely. And so the implications of this breakout of this trend channel are, this is the bigger picture as I see it. One is that the low is in, and we're starting a new uptrend. That would be your black count. The problem is that you see how overlapping this is. It's a 3-wave move. It's messy. You don't want to see a new bear market or a new uptrend start with 3 waves. The odds are favoring that that's not what's going on, but it can. We could be starting up in what we call a diagonal pattern, a leading diagonal. We really won't know if that's playing out until we get up into this 41,000 to 4,350 range in the S&P 500. But this breakout of this downtrend channel tells me that either that's playing out, and then we're going to try and make a higher low, followed by a bigger move to new highs. Or what we're doing is this move down was just the first leg in a much bigger bear market. And so the breakout here, if this is just a larger bear market rally, This B wave needs to be within proportion of the length and time of this A wave. And what I mean by that is we probably won't just see it fall directly from here. There needs to be a correction that's relative to the length and time of this first leg down. And so I'm targeting these ranges up in here, probably up into the 40. I think we go higher than 4,100 and likely up into the 42, 4350 range. And I think that it should play out up until September. And so we really won't know what's unfolding. Is this a bear market rally? Everybody has their opinions. And but we really won't know until we get up into this range and turn back down. If we turn down in 5 waves, that's telling you orange is in control. If we turn down in 3 waves, that's going to build the probabilities that the black is in control. So why am I targeting the September? Well, we've been identifying these major inflection points within the markets, these cycles that are clustering together. And this one right here that we're in right now, it started last Wednesday, and it's really, we're right in the mix of it. There's 3 cycles that are coming together, and they're all major cycles coming together this week and into early next week. And so I'm expecting with major cycles, I'm looking for major turning points. And since we were trading sideways into it, and on Wednesday when it started, we had our breakout move signaling that, we're breaking out of this downtrend channel really, and that's confirmed. That to me was an inflection point and telling me that we're likely starting to trend back up. And so the next major cluster of cycles comes in kind of late September, early October. And this is not just confirmed with the Dow. Almost every stock that I track is showing this, but even TLT, long dated bonds, it's showing a cluster around mid to late September, early October. Even Bitcoin has a cluster coming up in late September, early October. So, that's what I'm looking for to confirm these big cycles. I'm looking for clusters of cycles that have a strong hit rate and that's being backed up by various markets. So that's why I'm saying that we should probably trend up into the fall, September, October, before we see the next major inflection point. But this breakout here is telling me one of these 2 things is playing out right now. So I'm not looking down immediately. I'm not looking down into August. I mean, obviously anything could happen, but the probabilities are telling me that this is probably what's playing out. Excuse me. The other thing I want to point out is since the market bottomed in June, look at what's been leading off of the low. Green is going to signal your risk on assets, biotech, high beta, telehealth, IPOs, consumer discretionary, crypto stocks, big tech, small cap, and this is our benchmark, the S&P 500. This is more than just short covering. This has been going on for quite a while. We're seeing big moves across the board in your risk on assets. And take a look at your bonds. So long dated bonds, the 10-year catching a bid, a pretty strong bid. And look at this, junk bonds are outperforming investment grade. And these are the kind of things I'm looking for to start a new kind of uptrend after a bear market. I'm not saying that it's over, but there's certain cues that you're looking for. This is definitely one of them. Are risk on assets leading? Have they bottomed first? Are junk bonds catching a bid? Are rates starting to go back down? These are things that, I definitely am looking for and we're starting to see. So I'm just saying, be open to the black count. We won't really know, like I said, until we start pushing up into this region right here. Over the short term, I think we're setting up. We could have another push higher. Excuse me. But we're setting up for another pullback before we can make that move higher. And once again, we're dealing with wavy 3-wave patterns. So this is going to be kind of a messy, big moves in both directions. So just be prepared.